Okay, ladies and gentlemen, good afternoon. Welcome to Innorobo Conference. Let's start with the first session. The opening session was this morning, and this afternoon we will have the first session, which is a round table dedicated to investment in robotics. Let me introduce to you Mr. Eric Boucharla, which is Director of Transaction Services at DELOITTE company, which will present you the round table.
Well, we're very happy to welcome you at this roundtable on the subject investment in robotics. So the underlying question of this conference is basically if we talk about startup, the question is, can the product make money, and will the VC invest in this product? The meeting will be twofold. We will have a discussion about this investment in startups for the first 35 minutes. Then you will have opportunities to ask questions, and then we will have 5 presentations by the 5 winners of the Call for Startup competition. So let me first introduce our 4 speakers. So I will start with Jean-Jacques Bertrand from Robototics Capital, who's one of the fund in investing in Robototics Capital, to be more accurate. And so the fund will be really active in this summer, and he is acting in place of Bruno Bonnel, who was busy for another event. DMITRY GRISHIN, who is from Grishin Robotics, also co-founder of MEYER Group. We have INVESTIRS, who's investment partner at Bosch Venture Capital, and François Xavier MEYER, who is director in SEB Alliance. So we have 2 private equity venture capital and 2 corporate venture capital. And I will start with the first question. That question will go to Jan Westerhus about the key assets. There are many things to assess in selecting the right robotics startup for an investment. It could be the right people, the right innovation, the right market, or the right something else. So what's your idea? For which one would you go?
Maybe, can you hear me?
Is this on? Do I need to switch this on?
Now. Maybe I need to add one thing. I mean, usually people is very, very important in venture, as always, with every investment. This said, I think especially for robotics, it's very, very important that you have a very clear understanding about your application. Just technology, as difficult it might be to solve certain problems, you need to know your market, you need to build up an understanding about the environment of your market. And it's not just to get an autonomous system from A to B. You might have to integrate in certain processes of your potential customers, and you need to be very, very clear about this. This is actually the first thing that I'm asking. And then secondly, and connected to this, the next big question is the market big enough?
Okay, thank you. Anyone else ready to answer this question as well?
I am basically in agreement with you. People is key. You know, unfortunately, I am probably the older in our panel, and I have some experience in the VC. When I was a beginner, I thought that most of the attention had to be paid to the business plan, to the market survey, and of course, you realize, as you said, that the key assets it was the founder and the team in the company. As regards the scarcity of talents, but probably what I have to say is specific to the European market. We have the chance in Europe to have access to a broad set of very qualified engineers. And in addition, and probably it's different from the United States, we enjoy a real loyalty of engineering people. I mean, you know, I don't know if you have the same experience, but some of our startup had this type of difficulties in California. It's very expensive to recruit talented engineers, and suddenly they can leave the company and go to a competitor. In Europe, we have much more loyalty, and we are lucky about that, with engineers. But what is really, for me, more difficult to find is marketing guys, and specifically product marketing. And a clear vision of your product marketing is, for me, a key asset as well.
Thank you. The next question, I will ask it to DMITRY GRISHIN. It is said that venture capital funds want rainbows and unicorns. So, do you agree with that? And what is the portion of faith and irrationality in your investment decisions, if any?
You know, if you can look on robotics, definitely there is a lot of different aspects of the thing you look in startups. But I think most important, if to add to previous question, is that I remember from internet time that we have a lot of people who do some technology but not understand how to use it for business. In robotics situation, it's even worse. You have a lot research people who are doing some interesting stuff, but they absolutely not care or not focus on how to apply this technology for real market. And I think for us, the main focus to try to make this switch, because as I said, like let's look on the internet. 1992, 1992, 93. You have some cool technologies. People already understand that it is a World Wide Web, but still very few real business models. And internet spent maybe 5–10 years to understand that they need to focus on product. They need to focus on beautiful design. For example, I see a lot of ugly robots. People will not buy ugly robots. People want really beautiful product. This is important for consumers. This is a very simple rule which you can learn from internet, but it's very difficult to follow. And if you want to do it in consumer market, you need to understand it. Or for example, one other important stuff, if you want to cover consumer robotics market, you should not sell your robot for $50,000. What we see, we need to, that like average price, which are really like works, it's price of average notebook, like $2,000, $3,000, maybe $4,000. In this case, you can cover bigger market. So I think these two simple rules, focus on your design, focus on price point. It's very important, but still very few robotics companies to follow. And my recommendation to people who are sitting in this room, it's like two recommendations. First, you can now start a robotics company, which was not the case 5 or 10 years ago. For example, if 10 years ago you want to start robotics companies, you have no chance. You need millions of dollars to try to do prototype. You need millions of dollars to try to do production. Right now, situation is fully changed. You can do prototyping very cheaply because of 3D printers. You can do outsourcing of production to China, to other places, so you don't need to build your own factory to produce robots. And it's now much cheaper. You have like 2–3 engineers in the company. And try to focus on the user experience. Try to focus what problem you're solving. This is very, very, very important. And like coming back to the question, definitely there is some rationale and some feelings, let's say this, but two key criteria which I said, it's of course focus on product and focus on consumer orientation. I think this is pretty much key stuff.
Thank you, Dmitry. The next question you partially answered, but I will ask to François Xavier about the deal flow there. Would you say, François Xavier, that there are many opportunities to invest in and that you don't have enough time to look at all of them, or would you say that there are very few real opportunities as a VC in robotics?
Actually, concerning time, it's clear we don't have enough time to look at all opportunities. And in SEB, so Group SEB is a small domestic appliance company. We are looking at consumer application. So we look at a deal flow who can have synergies with our R&D roadmap. So we don't look especially on the entire robotic as an end product, but we look at also in the components. So and Jens and DMITRY told before, and also Jean-Jacques, it's really a matter of time to market, management, and also application and the maturity of the market. And for the time being, a lot of robotics are still very far from having application. So the deal flow is quite few. There is few deal flow, few quality deal flow yet, but we think, and robotics is one of our key sectors we want to look at, is promising. So it's something we are a young fund, so we just started in 2011, but we want to look at this market, and the deal flow is ramping up. So
okay. Thank you. Then the next question is for Jan. So about crowdsourcing. I don't know if you're familiar with crowdsourcing. It's like my major company, but applicable to other projects. And it's the question is quite basic. Do you think you're in competition with crowdsourcing platforms to raise money for a project? And what do you bring to a startup in addition to crowdsourcing platforms?
Let's say we specifically, I don't think we're too much in competition with crowdsourcing because typically we would enter at a later stage where you need more money, and usually you don't get 5, 6, 8 million through crowdsourcing. Sure. So if a company, for whatever reason, chose the crowdsourcing to get funded and then get really to a nice prototype or whatever and a nice application, that wouldn't be a problem for us. Honestly, I did not come across this specific issue when I wanted to invest in a company, but I'm sure we will be able to deal with it. However, for crowdsourcing, I would ask myself, founding a company, if all the VC guys and maybe also corporate investors turn away, maybe something is wrong with my business model. This is not necessarily the case, but the question is valid. To your second part, what do we bring in addition? I mean, especially since we're attached to the big Bosch corporation, we can open doors. I mean, first of all, we bring money to the table, which is good, hopefully. Then there needs to be something like a strategic interest from the big company, which is usually technology based. So there's some USP in your company that the big Bosch cannot do or is interested in using in different applications. And so usually already during the diligence phase, something develops between Bosch and the startup company, and we kind of are the matchmakers who eventually also invest in the company. And sometimes this is very, very fruitful. Sometimes this is also fruitful, although in the end, for whatever reason, we chose not to do an investment. But the two companies still continue to work together. So that's the opportunity. And it's up to the startup to really grab it and work with this.
Okay, thank you. Then I have another question for Dmitry about the market. So about mass market application versus technological breakthrough, which one you think will give success to robot industry? A simple, affordable object with a few low-tech application, or the true innovation, which will maybe needs more time, but which is something totally new and never done before?
Yeah, I think also I like examples from history. If you can look personal computers history, let's go back in 1980s, for example, beginning of 80s. You have personal computer called Apple I, and they was cheap, very interesting, but nobody know how to use them. Pretty much all programmers and geeks used to like do some coding, but real customers don't know what to do with these computers. And then, after some iteration, there was invented two applications which really changed computer industry. One application, it's Excel. It's now called Excel, but at that time it's called like electronic tables. It's help business to use computers. So you now can do some calculation of budget and other places. And this simple application, I think it's a company called VisaCalc, and then later Lotus 123, which bring electronic tables to computers. They really bring application that people understand why they need to buy a computer. And after this, sales of computer growing significantly. The second application was games. So people invent that you can create some games for computer, and people start to buy computers for homes. So these two simple applications really change cheap computer from toys for the geeks to really big, powerful market, which I think more than $1 trillion right now. So definitely, I believe that for robotics, we need to find good consumer applications, and consumer market is most important for robotics. Why? Because people mind is set up very simply. If they don't see revolution around them, they don't believe in it. So for example, we have industrial robots for last 30 years, but nobody cares. Nobody sees them. Only maybe 1% of the human beings ever know about these industrial robots. But once you see robots around us, like Roomba, like other things, people start believing it. They start to invest money. They start to bring their children to educate robotics. So focus on consumer market is very, very important. Only chance to make exponential growth is invest in this market. So I definitely believe that we need to find some simple task solutions. One of them, of course, is Roomba, which is already working. I think other direction is definitely telepresence robots and some other similar tools. But I believe in this scenario. I don't believe in universal humanoids, which, for example, Japan is very believe, right? They spend a lot of time and money to build this like human-like robots, like Asima, who cost $400 million, not $400,000, and you need 5 people to drive this robot. So it's definitely not the way of taking the customers, but it's good showcase for robotics. So this is pretty much. Okay.
Thank you, Dmitry.
You want to add something?
Yeah.
It's the point of view of a consumer-oriented company. So it's a mix between actually application. So you say that it's the consumer who's going to decide if it's good for him and going to use it, and also price. So need to have a good mix between affordable technology and application. So and then you can go to mass.
Okay. Thank you. Bertrand, maybe one question for you about the right moment to look for funds for a startup. What is the right stage? Not too late, before the cash crisis, of course.
The right stage is when you believe that you are going to need money. I mean, there is no simple answer. But just probably a few comments about question how to not only what time, but how to look for money. And I would say first of all, you have to understand that our mission, where does the money managed by the fund come from? The money comes from primary investors like pension fund, family office. And our own investor in the investment fund, they just want from us superior returns. And they put our money for management for 10 years. Our duty is to bring them what they are waiting for, that is to say superior returns. So when we turn to potential investee company, I believe that before looking for money, the founder has to ask himself, in truth, 2 key questions. First question, do I want to become rich developing something in the robotics, a product, a component? As a founder of a company, do I want really to become rich? The second thing is because, you know, if you want to survive, if you want to be resilient as a startup company, you have to have the willingness of changing something in the world, changing part of the market, changing way of life in certain areas. And this is the second question a founder has to ask himself. Do I want to change? What I want to change in this world with my company? And if you are able to answer these two questions, the first has to be answered positively. Yes, I want to be rich with robotics. And the second is more in identification of the area you want to change with your company. For me, it means that you are ready to go to the venture capital fund and to ask for money. Regarding the nature of the relation with VC fund, first of all, you have to establish contact well in advance. It might be just informal contact, like in an exhibition like this one. Later comes generally with a private placement agent, who helps you to raise funds. It's a more formal presentation with a well-designed business plan, etc. But before that, before you have the full presentation, before you have selected, if any, a private placement agent, do not hesitate to go directly to the fund and to have face-to-face discussion. It can, maybe it won't be conclusive, but you know, private equity at the end of the day is a people business. You have to establish personal contact.
Okay, thank you. Then the next question will go to Jan again, if you want to pick up a microphone. When you're looking at an investment, do you make a clear limit between industrial robots and service robots? Do you think investment in companies such as Universal Robots, it's something you're willing to invest in, or you think it's you have to choose your side?
Let me answer it this way. I would like to answer the question from a technology point of view. The industrial robots, the big, SCARA robots, welding robots, and so on, they've been around for many, many years. It's a fairly consolidated and mature industry. Plus, it is not so much an area where our sponsor is playing. So we're not really interested in this. What's interesting for us in service robotics is the whole new way of dealing with probabilities. So probabilistic approaches, dealing with different sensors, a high degree of autonomy. This is very interesting to us. And this is why we almost exclusively only look at service robotics when we talk about robotics. So we're not, I guess, as everybody else here, are not talking about the big SCARA things.
Okay. Then Dmitry, can you maybe let us know where do you think we should add next? What is the most promising end-user market to your opinion? Healthcare, domestic robot, entertainment, something else?
And may I ask also a question? You're asking a question, may I ask a question, okay? I just one question to the audience. Can you raise the hand? Who is like from robotic startups here or plan to launch robotic startups? Can you raise the hand? Okay, we have some people. Okay, good. So I hope it will be more and more in future, but asking your question in terms of future of robotics, as I said, it's like very simple rules. First, you should focus on consumer market. I definitely believe this is a very, very big potential market. Not go to industrial robots. Why? It's a lot of discussion. I agree completely. This market already consolidated. You have like four public companies, and it's very, very not say regulated, but very conservative market. It's very difficult for you if you're a small startup to make negotiation with like big car manufacturer companies to do something. But in terms of consumer market, it's huge, it's growing a lot. and focus on this market. So I think it's very important. In terms of business models, I think there is pretty much 3 business models in robotics right now, and I think will not change too much. First business model, sell robots. So you create good robot who people like and you start to sell it. In terms of selling a robot, you have 2 options. One option, you can sell it through distributors, which sometimes take a lot of margin from you, but it still works very well. You can find like local distributors, you have some electronics shops, but this is the model. The new model, which more and more startups in Silicon Valley start to use e-commerce. So start to sell your robots through the site. In this case, you have direct relationship with the customers, and you don't need to spend money on distribution, but of course it depends how good you can do it in terms of promotion. But this is pretty much very usual business model. You create robot, you sell robot. Second business model is renting. You can rent robot. For example, you see that your robot is very expensive, or there is no make sense for customers to buy it, so you can rent robot. And there is several business models where, for example, in telepresence, give you example. You have a lot of museums, and you have telepresence robot, and you can rent a robot for $10, so people from one point in US can see museums in Paris, for example. And they pay only like $10 per hour, for example, and they don't buy your robot. And last business model, it's more like open source or support model, where you give your robots or pretty much for free, or not make money on robots at all, but you make money on support. So you create a robot, you give it for community, but community need service, some support, and you make money on support. So in terms of business models, this pretty much 3 exist, and they're not changing too much. So you should decide what's the better way for you. In terms of directions, I think that anything related to make automatization of simple tasks, especially at home, it's big market. For example, we have already Roomba, but it's only beginning, right? We can do like automatization of security, automatization of some housework. For example, if you can look on like examples where I can go, we already have some robots who clean windows, who cut some stuff in your home. So this is definitely big market. In terms of other area, I think education is good market. Why? Because robotics, it's pretty much area where you have all 3 components which children need in future. They have like physics, mathematics, programming, and all kind of engineering skills. So if your children learn robotics, they're pretty much very well prepared for 21st century. And it's growing market. I know Lego already involved, and we see more and more startups who address this market. And I believe it's huge potential in this area. And of course, a lot of other markets. But if you ask me like where to focus, I think this is pretty much.
Thank you.
And happy to answer maybe some other areas, but this is most important.
Maybe one of you want to add something about that, and then we can ask for question from the audience afterwards.
I don't fundamentally disagree with Dimitri. I think at the end of the day, at the end of the game, and we have a good example with the internet, the company which target the mass market are larger company. But for the short term and the mid term, my opinion would be probably a bit more balanced. Probably there is a misunderstanding, or there might be a misunderstanding about the word industrial robots. If we are referring to the traditional robots, generally very cumbersome, expensive but sophisticated machine, yes, this is a declining market. But we see with the new generation of robotics a pretty good range of application dedicated to industry. And we have announced the closing closing of our fund for this next summer. We are really in the next phase, and we can already say that probably half a dozen of large industrial group will invest in our fund a small amount of a small share of money. And they won't be dominant, but they want to be investor in Revolution Capital. And for me, it shows that they believe, as an industrial company, that the new generation of robotics can change something significant in their business as well.
Okay, thank you. Now we are happy to take questions from the audience. So I have the microphone.
Thank you. It's a question about the business models. You said that you can rent the robots or sell the robots. For you, what are the criterion to choose one model or the other?
So, is it correct to understand that you ask what to better to rent or to sell robot, right? Is it the question? And when? Okay, so it's definitely depends on the area where you working. I can give you one example. I know one company who create telepresence robots, and they cannot sell them. They position the price maybe more than $10,000. Nobody buys them. But then they found the market. Okay, let's rent these robots for conference. For example, some company wants to look cool. And to look cool, they want to see robot around them. And companies start to rent the robot like per hour for some conference. And now they're growing very fast and have more and more customers. So this is one example. So it's very depends of what kind of product you are doing. For example, if you create small robot like Robototics robot, which costs $100, I don't think it makes sense for rented. It's very, very, very difficult in terms of logistics, in terms of other stuff. But this kind of example, I believe that huge market, by the way, it's I call it entertainment robots. I don't know, I see a lot of Aldebaran's robots here, but I know a lot of small companies just create show with Aldebaran's. So they dancing, they doing some show. I know one company in Europe, I don't remember where, they try to do robot theater. So they create like Pinocchio with robots, and children can come and see the show. So definitely the market for like entertainment robots, it's good renting model, because you don't need to buy. For example, if you are like Justin Bieber and you want to do like a show with robots, it's not make sense for you to buy all these robots. You can just rent them for show. But on other markets, especially if price is small, it makes less and less sense to rent it. And of course, the other business model which I said, to give robots for free or not making money, this is also a big and good model, especially for some kind of open source hardware, where you can create some open source kit, sell it for zero margin, and then do a lot of support. Like MySQL, if some of you familiar in internet and software. This is, I believe, business model which only few companies use right now, pretty much in the US, but I believe it will be much bigger market soon.
Thank you. Maybe there's another question.
I would like to know, when you mention the market size, what does it mean for you, the market size? What's the size in the robotics? Because in some other area, it's not the same size in terms of investment. Thank you.
Absolutely. As a rule of thumb in venture, and feel free to amend or contradict me, but actually a market worth looking at, or a company worth looking at, needs a market of 300 million, something like this. And this is sometimes very hard in robotics. especially if you don't go for the full model of robotics and sell the entire robot, but maybe only concentrate on parts and components. Then markets tend to become extremely small in robotics, and when you are, let's say, at a world market of 50 million or maybe 100 million a year, I mean, how much market share do you need to take as a company to get to a really significant revenue? And don't forget, that doesn't mean that your business is not good or that you should do something else, but maybe you should think about another form of financing it. Venture is very expensive money. You can go do great things with it, but you need to have the playing field and the market for it too.
By the way, you said the word parts, and I remember one interesting thing. I personally don't like the company who produce some parts of the robots. Why? Because looking the software or internet, usually people who create end user device pretty much control the user experience, and they can slowly killing your margin if you're only part of it. So I pretty much. I personally more like companies who create solution, create final device, have consumer brand, who have a relationship with customer. Otherwise, if you're not visible, company who create final device will slowly killing your margin, which happening in internet and in other markets. So it's my recommendation. I don't say there is company not make money, but my preference is to focus on end user device. Why? Because you're more controlling user experience, and second, you have always direct relationship with customers, and third, usually if you are like a B2B company, you need to be more sales guy, you want to sell a lot, and this is sometimes very difficult for small engineering teams. So this is my preference.
And referring to the potential market, when you take the example of the vacuum cleaning market, it's a mature market, vacuum cleaners, and iRobot came with a solution with a robot, and you know we are producer of vacuum cleaners, and the history of experience says that you know you stay and you see how it ramp up. And actually it went up. So today they took a market share, and we are following. So this is a good example of okay, there is an existing market, and they can take a part of this market. So this is also a good indicator when you look at a market who is big, large, and you come with a substitution, and robot can substitute from a usage or application. So, but there is a risk that it's not penetrating.
Thank you. Or maybe we can take one or two more questions, and then we will leave the stage for the startups, the winners of the competition.
Thank you. I have a question. I would like to go back on the crowdsourcing and crowdfunding mainly. For me, when there is a successful startup or something that can raise a lot of money in crowdfunding, that means that it already has a commitment from consumers that will buy the product in some way. But otherwise, if it's like founded by venture capitalists, maybe the venture sees the market, but maybe afterwards people will not like it because it's something maybe they don't need yet, or they will not feel the need of it. Because for me, there's two different parts. There's Dimitri part where he says that we have to concentrate on the user experience and the design. And then there's the other part when you say that it's better to get venture capitalists and not crowdfunding, but then that means that the market, which is the people, which are the users, will maybe not like the product. What do you think about it?
Interesting argument. I think it's a valid argument. However, if it's so obvious to many people that there is a need for such a product, then usually you would be able to run across a VC who also sees this. So I'm not sure if there's many examples where to plainly speak, the VCs are too stupid to see the opportunity, but many consumers do, and this way you're able to raise a lot of money. I think there's nothing wrong with crowdsourcing, absolutely not. It's a question of stage. So in the early stage, where you maybe not have been able to find an angel, but many people are sharing your vision, are able and willing to give some money, you would be able to get the company to a certain stage where you have some proof, where also more VCs would be willing to finance the company. But maybe I'm the wrong person to ask here, because we are not investing in very early stage companies anyway. So maybe this is more Dimitri's.
Yeah. You know, in company which I look, some of them, maybe big percent of them have Kickstarter. And if you look about VC versus Kickstarter, I remember my discussion with one of co-founders of Kickstarter in Davos, who is using Kickstarter for what, and I can say that it's a lot of interesting stuff happening there, which are not very visible. First, a lot of successful Kickstarter projects then fail to deliver product, a lot of them. It's why? Because usually to create cool video and cool product and bring it to the on the site, it's not the same as make production of thousands of 10,000 items. You see a lot of stories like Pebble delayed a lot timing, and pretty much a lot of startups on Kickstarter or delayed or have some problems, and they even thinking maybe to do some special category for hardware devices, right? Because you know, Kickstarter is used for films, for software a lot. I think films may be the biggest category for them. So hardware device is a little different, but this is problem number one. A lot of them are failed, and I think when you're going to crowdsourcing, you should be very careful about how you can make production of this item and how you work with this. It's idea number one. Idea number two, in terms of competition with VC, definitely win competition. So everybody, or somebody who's saying, no, we're not competing, definitely we are competing. Angels money, crowdsourcing money, VC money, they're in competition. But a lot of situations when they help each other. For example, several companies which I'm talking on, they have successful Kickstarter and then raising VC. And third idea, which is also very important, Kickstarter users are not regular users. They are really big geeks. They sometimes much more, how to say, easy feeling about problems with your product. For example, it's interesting feedback. If user buy your robot and they are broken, usually users say, "Whoa, it's a big problem. You're a bad company." If Kickstarter user buy your product and it's broken, say, "Okay, I can help you fix it." They're writing some features and this kind of. So it's a very geeky audience, and sometimes it's very useful to get some feedback from them, but it's not very 100% sure that your product will be successful in our market. But it's good beta tester. I call it beta tester environment, where you can get a lot of feedbacks, a lot of this. So be careful with feedback on Kickstarter, and it's not 100% that your product will be super successful if they have success on Kickstarter. This is just a recommendation for you.
Okay, thank you, Dmitry. I think we have one last question and then maybe a quick answer. Then we will start with the startups.
So what would a VC typically ask for in return? So what would a VC ask for in return for an investment? What are the typical figures here?
I think we will have 4 different answers, because we are not looking at the same return. For Jens and me, we are a balance between financial return and strategic return. Jean-Jacques is going to look on financial return a lot. He told us before, and Dimitri, it's part of your money, so it depends. It depends. On our side, we put the strategic first, but we are also having a look on the financial, because it makes you live longer with our money inside the company. Maybe you want to answer?
I'll give it a shot, put a couple of numbers on this. If you look from a pure investor perspective, a typical pension fund investing into a VC fund, the money is tied up for a long time, 10 years or so. So they want a superior return to investing into the stock market. So let's say if the stock market return over 10 years is 8%, if you're a little lucky, you want 12, 15% from a VC fund, okay? If a VC fund has, say, 20 investments, and a couple of them totally fail, a couple of them kind of dabble along so-so, maybe you get your money back, and 2 or 3 really make a good return. Then you can kind of easily back out what is the individual return that a VC asks for. And it's significant, but it's also dependent on the risk. So if you're 2 guys and a dog in a PowerPoint presentation, the VC obviously looks at a much higher return than if you are a company that has a proven business model and just needs another 5 million to build a factory. So maybe this gives a little bit of light here. It's not an easy answer.
Probably this is a difference between the United States market or the North American market and the European market. I think mainly due to the NASDAQ, the successful, the US VC or the VC acting in the US market are rewarded at a very high level in case of success. In turn, they can afford many failures. I mean, typically, probably it's a bit exaggerated, but in a portfolio of 10 companies in the US, in the North America VC market, you can have 2 huge successes. You make, as an investor, 20 times, 30 times money invested or more, and 8 failures. In the European market, it's much more mitigated. You are less rewarded for your success, and typically you probably get 5 times, 6 times the money invested in case of success. As a result, you can afford less failures. And to answer more directly, it was about the background, our own constraint. To answer directly your question, I would try to formulate as follows. When we look at a company, I mean, it's a case of Revolution Capital. The policy could be different for other funds. But when we look at a business plan, we ask ourselves the questions. If we fine-tune the parameter of the business plan in order to get a 3 times return, 3 times the money invested, are the assumptions reasonable or extremely optimistic or extremely pessimistic? And when we are not comfortable, afterwards, a few years later comes the reality, and the reality can be different, either better or worse. But when we are reviewing the investment memorandum, this is a question we ask ourselves. Is it reasonable, can we reasonably consider the circumstances when we make 3 times the money invested? Not a high case, a mid case.
Okay, thank you.